Which scenario do you choose for yourself to invest in so that your money can work as hard as you do? We're going to speak about whether or not your money is working for you today. Either your money is working as hard as you do or your money is working for you, you get to choose. Having to work a 9-to-5 job where you devote time and effort but are rarely compensated for it. Greetings from the channel again. We look forward to welcoming you to this great family over here where we do not do normal. With that said, today we're going to talk about banking. We're going to talk about what has recently been in the media related to banking and the fees that are being applied. And the charges, and we're also going to reflect on what really banks were supposed to do when they were created. And to achieve financial freedom much sooner, as you can see here. The issue is the outrageous fees and charges that are plaguing account holders. Who put their money in the bank with the intention of having it kept there safely, but instead, your money is either slowly dwindling away due to the fees and charges, or it is not being used in a creative way to give you returns that are profitable. For instance, when banks were first created, their primary function was to hold huge sums of cash to support commerce and provide loans. They didn't charge fees in the past. Can you believe that no longer is their business model to take your deposits, either lend them to others at a higher interest rate than they were paying you back, or invest them in mutual funds, real estate, or anything else that would generate a profit, keep a portion of that profit to pay their staff to run the business, and then give you a portion of it as interest? However, the business model has dramatically changed. The easiest way for a bank to make money these days is to charge us for the privilege of using our money. Whether it's through the fees we have to pay to simply keep money in our accounts, the fees we have to pay when we have a low balance or we write a check that's larger than we can cash, which you shouldn't do, but nonetheless there are fees coming from everywhere. In exchange for their entrusting me with their funds, I'm providing them % interest. A lot of the core banking that developed early on when banks were established is not really practiced at the same scale as it was back then. The simple way of making money is just to kill us with fees and charges, and that's the big practice that's out there today. You would think that there is some amount of conscience that says if you're making a decent profit margin, you should be able to give them tangible interest that makes sense, but none of that is there anymore. The reason we even put any money in the bank in the first place is because we need a reserve or an emergency fund. And it must be money that you can access without having to call your financial advisor, without having to go through the hassle of filing a tax return. We have a policy that states that as long as we have enough money in the bank to sustain us for anywhere from 6 months to a year, then that's our emergency fund or our reserve. This is where I'm going to tell you how to be the bank. In the same way that a bank has a reserve, we have that reserve, and that's all we keep in the bank. And we do not allow it to sit there to earn less than 1% interest annually. Now, let's move on to the reasons why we do not keep money in a bank. Keep in mind that I am not a financial advisor. I am simply outlining what we do and how it has worked so far. This will allow you to determine what you want to do and how you want to approach it. I always recommend consulting a financial advisor for advice because not all of us are financially literate enough to make these decisions on our own. First off, we don't put our money in banks because of the outrageous fees and charges. I go over all of them in this video, so I won't repeat them here, but the point is that this is one of the main ways banks make money today. Every other dollar we invest, including our emergency fund, is kept in banks. I'll explain how we do that in the video below. The unfortunate thing about fees and charges is that you are being charged just to keep your money in your account. Depending on where you live, by the time you're done that's about $50 in taxes, so to then put it in the bank to be charged more fees and more taxes, it just does not make sense to me. Also, if you opt to leave it there, you will be charged fees, the amount will start to decrease, and eventually it will become inactive, making it impossible for you to access your own money. This is just not a sensible choice. The second reason we don't save in a bank is because the interest rates there are typically much lower than 1% annually. In many parts of the world, they are around 0.0 something %. But how do you know consciously that there are investments out there with low risk? Yes, some of them do, which is why you should consult your financial advisor. But how do you know you can get 3% with little risk or 5% with a little more risk appetite and leave it in an account that's paying less than 1% interest? However, most of what you just received in interest, and that does not include the fees related to you transacting regular business using your bank account. When choosing to invest, there are risks involved, but you must measure them against the benefits before making a decision. If you have anything more than that, however, it is no safer there than it is anywhere. The third reason we don't deposit our money in banks is that they provide substandard service. When you try to open an account with a bank merely to open one, it's almost as if the bank is doing you a favor because getting a loan from them is often like pulling teeth. The point is that while not all banks offer subpar service, many do. In light of the lengthy lines that snake around buildings, I wonder if banks use this as an ego boost. That is, do they think that the longer the lines, the more desirable what we're offering appears because people have to wait in line to get it? I have a sneaking suspicion that this is how psychology is operating here. I'm not going to bank with any of those establishments that either refuse to develop an online banking platform that is user-friendly. Hell no, it's not happening. Because they don't mind you standing outside in the blazing sun or the pouring rain to conduct business with your own money. I believe that certain banks' decision to close branches and fire bank tellers is a sign that they don't care about their customers or account holders. The fourth reason I don't put much money in banks is because of the unfairness or favoritism. Have you ever realized that when you're talking to someone and they say, "I got a mortgage from this bank and the interest rate that I got it at is 6% and you're there with your 9% interest rate on your mortgage?" There is some favoritism when it comes to things like interest rates, and since I come from a low-income family, guess who gets the short end of the stick? The bank is taking advantage of our ignorance to profit from something as simple as trading foreign exchange. The sixth reason why we don't deposit a lot of money in the bank at once is due to something I already mentioned. The lack of care and concern for the account holders or the members, whether it's the wraparound building lines and people being left outside, or it's the use of these less than user-friendly online banking platforms that force people to still stand in lines because, remember, the goal of the bank is to create wealth. Or it's the fact that some banks continue to raise their fees and charges during difficult economic times like the pandemic. After going over the 6 reasons why we don't save or invest in a bank, let me tell you what we do instead. We have decided to become our own bank. What does that mean? Then how do you become your own bank? There's just very little empathy and sympathy being directed to the account holders, which is going to cause those lines to grow longer. As the bank handles its customers' deposits and withdrawals, what we have done is carefully manage our income and spending to capitalize. Instead of giving our money to a bank, which is supposed to invest it, make a profit, and then give us back some of that money in the form of an interest rate, we cut out the middleman and decide how to invest it. If the bank would take our money in our savings account, we would invest it ourselves. If the bank would take our money in our investment account, we would do the same. All of that comes back to us now. Of course, you need financial literacy and expertise, which is why I encourage you to speak with your financial advisor. However, you can also read books, watch videos, learn about how to manage money, and take some risks if you're up to it after speaking with a financial advisor. We talk to financial advisors, we read, and we acquire financial literacy from wherever we can. As far as I'm concerned, a lot of it comes from watching YouTube videos. Instead of giving the bank our money to invest in mutual funds, we speak with a financial advisor and invest it ourselves so that we receive the 7% interest. Rather than the bank taking the 7% interest and giving us less than 1% at the end of the day. Another way we become the bank is by choosing which banking tools to use. For instance, we rarely use debit cards. Instead, I use a credit card. The thing with a debit card is that every time you use it, you're probably going to pay a fee. A credit card does have fees. Obviously, but the rewards that you get back, in my case, cash rewards that I can use to buy anywhere online or otherwise, they offset a lot of those fees. Or it was just before the pandemic. No, it was during the pandemic when I checked the miles account and realized over the last year or so we had accumulated thousands of dollars. The last way that we become the bank is in the same way that the bank has a threshold where, for example, if you have $5 million in the bank, the bank is only required to keep a certain percentage available in the event you need to pull it. This is why the bank would crash if everyone said they wanted their money back from the bank because they don't keep most of it available. Nevertheless, as the bank must maintain a threshold in order to function as a bank, we must as well. As I mentioned before, we ensure that we never have more than a particular amount in the bank at any given moment. This amount serves as our emergency fund, so that it can start earning money for us rather than remaining in the bank and being worked overtime. So that's it, YouTube family. I hope you found value in this video. If you did, please hit the like button. I'll share our experience and what we do, but this is in no way intended to be advice on how to manage your money. Always consult a financial professional so they can provide you with appropriate guidance. Thank you for watching, and until next time, be safe.